The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the December 2nd, terrific Tuesday edition of the Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes. Steve Perseverance Rhodes, for those that are new to TFNN, the Hotel California. Of course, I believe we should be pioneers of our future versus prisoners of our past. So let's begin our day and always remember that life happens for us, not to us. And that is a huge shift. Just one little word, the word for instead of to, will make all of the difference in your world. And of course, that means that we can find the good in every set of circumstances that the universe throws at us. And the universe, well, it's going to throw circumstances at us. So hope everyone out there had a magnificent Monday. As always, good to be back in the saddle, and let's go see what's rocking and rolling. Of course, it is Terrific Tuesday. This is Tiger Financials Network. I'm Steve Rhodes, and welcome to the show. I'm grateful for your presence here today. And of course, what that means is I would be so happy to hear from you. So just pick up that phone. Dial us at 877-927-6648, internationally, 727-445-1044. And that way, you and I, we can go rocking and rolling together out there. Right now, we got Dow Futures. Sorry about that. The Dow Futures here. Cord's getting a little tangled. Dow Futures, they are up 34 points, trading out at 17,789. S&P Futures up 3.5, trading at 2,054. NASDAQ up 11 points, trading out at 42.97. Russell up a couple points. King Dollar on the move this morning, up 428 ticks, trading out at 88.41. Goldilocks back $18 right now, trading out at $1,200 even Steven. Silver off about 35 cents, down at 16.34. Light sweet crude off a buck this morning. She's trading out at 67.95. Natural gas pulling back as well, off 10 pennies as we speak right now. Trade out at 3.90. A quick peek across the globe. Let's go see what we've got going on over in Europe. The DAX is flat. It's up 37 cents. FTSE, though, is up 1% this morning, up 78 points out there. Remind me. We'll go check in on... don't remind me. Let's just do it right now. Let's go take a look at the FTSE. Let's go see what the FTSE is doing out here. We don't want a 30-minute chart. We want a daily chart on our screen out here. FTSE looks a lot like the... I won't say a lot like it, but it looks similar. The chart pattern looks a little similar to me to the IWM. At this stage here, the FTSE, if it can take out the swing point high from November 21st, 67.73, then the FTSE will go up, or should go up to the top of its consolidation zone, which is in about the 68, 78, 69-ish, 60, we'll call it 6,900 even Steven level. That's its consolidation pattern. That is what's going on inside of the FTSE. Over in the in Asia last night, the Nikkei 73 points, the Hang Seng up 286. Remember, the Hang Seng was off 600 points the night before. So if we take a look at that, it recouped some of the gains, not all of the gains out there. However, the Shanghai, or the Hang Seng, I should say, still looks pretty darn bullish. I don't have volume. Volume would help out here, but I don't have volume. But still looks relatively bullish with the exception of that gap down. So it needs to close that gap. That means it needs to close that window, needs to close above 23,887 in order for us to continue to see that bullish potentially to be equals CD to the upside inside of it. Inside of the Shanghai out here, the Shanghai up 3% last night, up 87 points. We touched on this before. Let's take a look at a longer-term chart out here and get a better feel for what's going on inside this. This, we took this back and took a look at this. It's nowhere near the type of market that we had here in the U.S., meaning above its 2007 levels or anything along those lines. This still isn't above the 2009 high that it had back at 36.51. However, what it has done, if you go to that August 2009 level and use that as a touch point for a trend standing from a trend perspective, and then use as your next touch point your November 8th, 2010 level. What we do know about the Shanghai is it broke through that trend. Now, that was a long-term trend. It actually broke through it on August in 2014. This is a weekly chart. Okay, so the week that began August 11th. That following week, it moved above it. The next week, the week beginning August 25th, so I guess August 29th is the end of the session, tested it. Once you break a trend, you like to see price come back and test it, whether it's a trend moving higher or lower. Came back, tested it, and it rejected it the way that you want to see it rejected the following week there. The week ended September the 5th with a wide-ranging bar. Now it's been off to the upside. If we take a look at A to B equals CD patterns out here, and we start with the swing point low from June of 2013, that's going to be our A point. Our B point's going to be out here. Looks like either of these two highs are probably, well, it's this one here is the correct one. September, the week beginning September 9th, 2013. And the C point down here, the week beginning March 10th. 2014. Looks like this is headed up to 29.48. You're at 28.94. So this has got about another, 50 some odd points left in this. Now, can it go higher? It most certainly can. That would go ahead and complete a 1 to 2 A to B equals CD to the upside. Oftentimes, that's where you begin to see a pullback out here. But the Shanghai, it's an index you want to be paying attention to on a pullback, on a retracement. It's broken its trend, and nice retracement. Look for, I don't know what the ETF is for this indice out here, but at this stage, what we know is it's broken its trend. We can't say the same thing about gold, though. One heck of a nice move here yesterday inside of Goldilocks, but she did not break her trend out there. It's got to make us say, something to think about out here. And if we take a look at gold, you can see this little yellow diagonal line on my screen out here. That's starting with the August 14th swing point high. We took a look at that yesterday. So if you take a look at that as your touch point, and your next touch point being the October 21st high, that is out at 12.56. What's interesting here is gold yesterday in its short covering rally. That's what it was. Short covering rally for sure. We'll see if it can break this trend line. Breaks this trend line, then buyers are saying, what's nice about this gold contract out here is it has broken through a resistance line. If we take a look at that TAS market profile, and this morning's come back and tested it, and so far that has held. So 1,200, it looks like that market profile is 1198.90. 1198.90 is going to be a key level. If you see a break below that, 1181.60 would be the natural area for it to pull back to an 1152.70. Might actually be your buy point inside of gold if it were to pull back that far. Of course, that'll be giving back the majority of its gains from yesterday. However, this could break out. And if it's going to break out, if it's going to change its trend, just like the Shanghai. So you see, there is a method to my madness out here, even though I didn't realize it, but there is a method to my madness. And that is, we talked about the trend inside the Shanghai. We talked about how when price broke through that, came back, tested it, and then it was off to the races. Well, this could be the same chart that we're looking at. See, we need to be agnostic to the symbol that we're looking at, and instead just really focus in on the patterns out here. If we do that, then we'll learn to be able to trade anything. Doesn't matter whether it's an ETF, a stock, a commodity, a currency. It just simply is going to be the same patterns played over and over and over again. Just as an example, I'm doing the doing this 7-week workshop, which began the first webinar was on November 22nd. That was a Saturday, 3-hour workshop. And by the way, you can still attend that. So if you're looking for gifts, if you're looking to really improve your trading and understand these patterns out here, go ahead and sign up for that workshop on the homepage of TFNN.com. I think it's the second item in that kind of that left hand, what we call a little carousel. Don't really know what to call it, but you got a slider up and down. You can click on that. So it's not too late to get in. I do a weekly update. So I did a weekly update here yesterday. Actually, that weekly update, I went ahead and sent that out Sunday evening. And inside there, I had a number of patterns that were setting up for trades for people to pay attention to. We took a look at a currency pair. We looked at the Canadian dollar. We took a look at the S&P futures, the ES Mini, which we went short. My subscribers and I went short, as you know, on Friday. We didn't really take the day off necessarily because sometimes there's some bargains out there, some changes in trend that we could take a look at. So we took a look at that. We took a look at commodities. We took a look at wheat, which was potentially setting up a 3-drive right to a top pattern. It didn't do that. Instead, it was set, and some of these were on short-term basis. We also took a look at a trade that was a selling the D point out there that gave us a little shooting star on Friday, and yesterday had some additional follow-through to the downside. So I went ahead and did an update yesterday just because many of those patterns had either confirmed, and had, in fact, this called for the Canadian dollar moving higher, which it did yesterday. So anyways, it's not too late for you to, if you there's nothing more important than us being able to feed our minds out here. Well, as part of feeding our minds, one chart is going to be the same as the next. It's just simply the patterns out here. So the trend lines that we took a look at inside the Shanghai, if gold is going to get some footing, I haven't lost my bullishness with regard to gold, but it concerns me. Concerns me to see. I don't. What we want to see, what you want to see, is gold be able to break through these trend lines out here. If we do that, then we are likely off to the races out here. That's going to require more than just this short covering rally, which is what took place yesterday. How do I know that? I don't. It's just, but I do have theories out there for us to take a look at. And if it was not short covering rally, you're going to see buyers continue to come in and take gold above those trend lines out there. It is pretty much, it doesn't get much more simple than that. Now, let's do this here. Because as far as the markets here, we're seeing a bit of a bounce. Well, let me do this. I see an email here from one of the attendees at the 7-week trading course. And he was asking me about the 120-minute chart here for the ES. Now, the 120-minute chart here for the ES, and the update that I sent out yesterday was the mere fact that the same pattern that we took a look at that was forming the high out here, where price was moving higher into last Thursday inside the futures contract. It was Wednesday evening, I believe it was, on the 26th. As price was moving higher, it made one of my favorite patterns out there, where price is moving higher with less relative strength. And so when I sent out the update last night, 8 o'clock or so, I said, hey, the same pattern that was up at the high, we've got now down here at the low. No reversal signal or anything along those lines, but I just wanted to make folks aware of it. What I also said was, hey, look, as long as and I said we've got enough of a move lower here where we can move our stop now, because it was almost to the 0.68 retracement of its last set of swing points out here. So we can also go ahead and move our stop to break even. Now, you don't like to give back profits, but you also want to. At least it's nice to be in a trade where you can't lose money, right? Because we can always take money off the table. Now, what I also said was, look, so long as price gets rejected by this 13 period exponential moving average. I use 13 period because 13 is one of the numbers in the Fibonacci summation sequence. You got 1, you've got 2, you've got 3, 5, 8, 13, 21, whatever 21 and 13 is. So you just keep going that way. 55, maybe something like that. In any event, so I also said as long as price rejects this area, which it did overnight until about what time was it? About 4 o'clock this morning, we saw price just move a bit higher out there, and price did get above that. Now I didn't exit the trade or anything along those lines, but what I'll really be taking a look at is this black line that's going across my screen out here. And that black line happens to be the 50-day exponential moving average. Now, price finally broke through that area. That should really be our area of resistance. 2,000, and we'll call it 2,061 out here. Price starts moving above that, then I'll have to come back and take a look at, hey, what pattern might be setting up? Is an A to B equal C to D? Is there anything else that they need to be concerned with? But right now, we're in a no risk. We're in a risk-free trade, that is. 877-927-6648. We get back. Let's go take a look at the longer-term chart of the S&P 500.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve, take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Future, well, S&P Futures, I should say, up a couple of points. NASDAQ up 9. Had a question in our Tiger's Den. Folks, if you haven't had a chance to test out the Tiger's Den, and you're trying to just simply up your game, no matter what game it is that you play in life, it's really all about the peer groups that you hang around with. And so if you're trying to take yourself from one level to the next, maybe it's playing the game of tennis, maybe it's playing the game of golf, maybe it's simply trading. Well, when it comes to trading and investing, that peer group happens to be inside our Tiger's Den here at TFNN. So come on over to the homepage. You can check that out for the next 30 days. Go ahead and take that for a test drive. One of the questions, a great group of people in there, so good folks to rub elbows with. One of the questions inside the den was, hey, what about open interest when it comes to gold? And what I use open interest for, just simply on a weekly basis, is just to see what the large commercial traders are doing as a percentage of open interest, what their net short positions are, because they're always net short. Really, what also the so-called non-reportables, the group that's so small out there, that'd be traders like myself and you that the CFTC decided to call us non-reportables. But that's okay. The non-reportables are folks that stay at the party a bit too long out here. And I didn't get a chance actually last night to go ahead and update the charts out here, but there was no significant change inside of gold. What's interesting here, the non-reportable side with regard to light sweet crude, that group of small individual traders, they are still net. They're still, I think they were still net short out there in a pretty big way. I got to go back and look at it. Anyways, don't let me get confused here. Let's just stay on track here with gold. Sorry about that. A little brain fart out there. With regard to gold, if we were going to go ahead and take a look at HM Gartley, this could be the second A to B equals CD down on a 30-minute chart since the lows that were formed all the way back here on November the 6th. The very first, and what Gartley said in his book, and it's very valuable, is that when you see a change in trend, what you want to do is you want to buy that first A to B equals CD to the downside. Now, that first actual A to B equals CD pattern to the downside, that formed back here, started on November 21st at the high out here. And so if we take a look at this pattern, that's going to be your A point is going to be out here. Now, it's a 30-minute chart we're looking at. Your B point's going to be down here at about 9 a.m. or so on November 25th. And then a shallow retracement out here. And what we can see is if I pull this back, now as price made the 1-to-1, 1183.40 out here, it never really got a bullish reversal signal. You did get one right here, though, at the 1-to-1.272 A to B equals CD to the downside, a little hammer candle, which ended up failing. Now, price moved obviously substantially lower as simply commodities traders, in my opinion, were just simply unloading because they got caught on the wrong side of that oil trade. Well, our second A to B equals CD down pattern, in essence, has or is forming out here. If we take a look at that, again, it's a 30-minute chart out here. And so this is going to be better than, any open interest reports, what the commercials are doing. Just simply the pattern, ma'am. Wouldn't that Joe Friday, wouldn't he say something like that? Or maybe it was Gannon. If we take a look at the B point's going to be down here at 1900 hours, and our C point's going to be up here at 1:30, between 1:30 and 2 this morning. So we now have what has formed as a 1-to-1 A to B equals CD to the downside. Now that price projection, by the way, 1192.20. The actual low, 1192.10. You got to like that. Now we didn't really get our first bullish reversal signal until right here. Little bullish engulfing candle that took place between 8 and 8:30, and we did get some follow through to the upside. That says that this ought to be right here. This ought to be the time where the buy is coming. We've got a confirmation out here. Now, this little candle here that we're in between 8:30 and 9, this is where we're really going to find out if gold is ready to take off, because here's your second A to B equals CD that, in essence, has formed. And truly, if we use H.M. Gartley's work, which we all should do out here, this is where we're going to find out. Now, the real key is going to be, because we've got the reversal signal, we've got a 1-to-1 A to B equals CD to the downside. Retracement-wise, what this also says to us, if we go from the low, the most recent low, as commodities traders were throwing up back on Friday out here, we've only made a 0.382 retracement. Take a look at it. The 0.382 retracement off that little hammer low back here at on November 30th out here at the price point of 1141.70 all the way to the high that I'm using as my A point. Your 0.382 retracement, I'll pull this off to the side here, 1190.70 is that number. Remember, we got down to a price point here of 1191.40. So if price is going to take off from here, this is going to be one heck of an A to B equals CD to the upside. So if we really have formed a bottom, if this is truly our Gartley buy here, we ought to see the price of gold get up to $12.92. We're trading right now at $11.97. That's a nice one. 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got 23 points straight out of 17,800. S&P upper point trade in 2054. Composite of 5. She's traded 47.32. Russell 2000 up about 3.5 points trade at 11.57. DAX off 21 points right now. FTSE up 72. Goldilocks back $22. Silver off 42 pennies out here. Light sweet crude back $1.07. I looked at my notes during the breakout there. So what I noticed, for the last couple of weeks, I've been looking at the commercial traders' position on light sweet crude, and I haven't been able to get a good read on it. Of course, I hit myself upside the head and said, hey, go take a look and see what the non-reportable group is doing out there. And as I looked at the numbers on my spreadsheet last night, I didn't go ahead and post it over into a chart. It's a little bit of work to do that. What I noticed is over the past 3 or 4 weeks that the non-reportables have been moving to a net long position. And so what that actually tells me is the move down in light sweet crude is probably not over.
And when they get to a strong net short position, because they're usually, it's like a counter trend ability to read what the non-reportables are doing. That's probably when we see a decent tradable bottom inside of light sweet crude out there. So that was my thinking because I still couldn't get a good picture as to what the smart money, the big money, was doing when it comes to Texas tea out there. I think there's other things going on inside that crude marketplace, and it just makes sense probably not to even be in it and to look for other things out here. Speaking of other things, moving to the upside out here, you got Biogen, BIIB, up $18 right now. It is trading out at $326 You've got FedEx Corp up a nice 2.5%. That's up $4. Xion. CODE is the ticker symbol code, up 18%, up $4. Royal Caribbean Cruise Lines, I understand they're going to be a part of the S&P 500 maybe at the end of Thursday. They are trading up about 4.5%, perhaps on that news. Tesla up a couple of bucks. Celgene up a couple bucks out here. CarMax up a couple as well. To the downside, Agios Pharmaceuticals down about $3. That's trading out at what is it trading out at? 93.39. You've got Quidel Corp, QDEL, off a couple of bucks, trading out at 25. Apple's off $1.82. American Tower Corp, AMT, that happens to be the equity that gave us the actual sell signal that was featured in, I believe that was, let me put this over here in the time frame, make sure that's the symbol we were looking at. Yeah, most certainly is. This is the actual equity that I identified that had formed A to B equals C to the upside with the reversal signal, and that was accomplished on November 28th out there. There's your shooting star candle, the long lost cousin of the hammer, because it is occurring here up at the top. And yesterday we had a move lower. Now I suggested not taking this trade out here, and the reason is this. Because when you evaluate the trade, when a trade sets up, what you've got to do is you've got to do the reward to risk on anything that you decide to go ahead and trade. That reward to risk needs to fit with inside your parameters. Preferably that reward to risk is going to be something better than a 3-to-1 type opportunity for you. And if we take a look at American Tower Corp, even though it completed the 1-to-1 A to B equals CD, even though it gave us a nice little reversal signal at that 1-to-1 level, what I noticed here inside this equity is that it had this nice wide price spread accelerated volume day from November 6th. And what that said was our target for where price ought to pull back to was 101.46. That was the top of that. Maybe it was going to be the bottom where the gap was at 98.48, but could easily be the top of this because it was a sign of strength from November 6th. It wasn't really that long ago and so I said, hey, 98.48 is what we would get out of this thing, and yesterday's close was out at 103.49. $3. Your stop has to be over the top of the shooting star, which is up at 106.31. That's like a 1-to-1. Doesn't mean that this thing won't really crack and move lower. It absolutely can, but it does have that nice sign of strength out there. So they're better, even though you got patterns that complete. You don't necessarily take all the trades. You want to do the reward to risk on it. In this case here, American Tower, it just wasn't in the cards out there. That does not mean that it won't move lower. It just says you got to be cautious. You got to be able to evaluate all of the different signals and great information that the charts provide us with. So speaking of great information that the charts provide us with out here, let's take a look at the S&P 500. Let's take a look at the long-term chart out here. So hopefully you're watching us on Tiger TV and HD TV, no less, out here, so it makes it a little bit easier to follow along. Now, there are many people that believe that I am bullish. I'd have to say you're wrong. The stock charts that I look at are bullish. The patterns that I'm taking a look at are bullish, and it's not really me. All I'm doing is reporting the news. Now, the type of news that we report here at TFNN is different than the news that's reported at CNBC. They're reading a teleprompter for the most part. I got no teleprompter. This is my teleprompter. You're looking at it. This is my palette. This is my Picasso palette out here. It happens to be a stock chart. So this is our artwork. And so it's up to you and I to go ahead and take a look at that artwork and see what it tells us. Now, one of the patterns that doesn't matter what your technical skill level is, that you can learn, that you can absolutely learn, is to be able to visually look at a chart and try to identify the consolidation areas. Now, this is a long-term chart. This is a monthly chart. This goes back right now, this goes back to 1996. And as we take a look at the consolidation pattern, just simply going to go ahead and draw a box. So we're going to go ahead and we're going to decorate our palette. We're going to do some Picasso type work out here. And we're just simply going to use the high out here from 2000 as really the beginning of our box, the beginning of the consolidation. Now, in this case here, we can just simply use the lows. We don't have to go all the way down to the 2009 low. We could, but we'll say that the actual bottom of the consolidation box was really the lows back in 2002. Now, look, I haven't drawn this exact. When we do artwork, this is not paint right inside the line out here. We're using this as our guidelines out here. You know, like it wasn't Jack Sparrow, it was the other guy that said that. Now, what we're going to do with regard to our consolidation box out here, Barbosa, that was the guy's name. We're going to take our consolidation box and we're going to now move this, because when you break through a consolidation, your price moves equal to or greater than the consolidation. It's really just that simple. You can go back and how often does it do that? I don't know the exact percentage. Even if I did, it would be like pulling it right out of my arse, and I'm not going to go ahead and do that. But what I can tell you, if you trade this long enough, if you watch it, you'll be like, holy cow. I mean, that's an easy pattern to actually be able. So from a technical trading standpoint, it's an easy pattern. Now, let's go ahead and move this up to the top out here because of the breakout that we had. So it's really up at the top of this pattern where it is that the S&P 500 on a monthly basis wants to move to. And if we take a look at what that price projection is, it's right around that 23.50 level. Maybe it's 24.50, maybe it's 23.25, but it's right around. What I can say is we're nowhere near that level as we speak right now. So that's the first element. That's the first pattern. It's the easiest pattern. You need absolutely no technical skills whatsoever in order to be able to see this pattern. So see that it's the chart here. When we take a look at the monthly, that is bullish. It has nothing to do with Steve Rhodes. That's pattern number one. Now let's go decorate this. Let's go ahead and eliminate that. Let's go take a look at the A to B equals CD pattern out here. Let's go ahead and put that tool on our screen and take. No, you know what? Let's do. Let's take a look at horizontal trading ranges. Okay, a little different than what Bud's work, which uses primary trading ranges. The reason why it's different when I put these on the screen here is because in the case of Bud, when he was developing that system, he didn't have a way to necessarily automate it. He's using the co-located opens and closes, so am I. The body of a candle is the essence of price. The body of the candle is what helps us to understand from a Japanese candlestick charting aspect what's really going on in the market. Now, because I've got this tool automated, I'm going to have the guys on here in the not-too-distant future, next week or so, that help me to do that, because a great group of guys out here. And so what I'm able to do is identify these what I call not primary, but horizontal trading ranges, which are going to be different on a monthly than they are on a weekly, than they are on a daily, slightly different than they are on an intraday. Why? Because the open and close of a bar on a daily chart is going to be different than a monthly, and it's going to be different on a weekly, and it's going to be different on a intraday chart. But if we go ahead and we put the monthly, since this is a monthly chart that's up on our screen here, right now as we take so for those of you that follow Bud's work, and you should, and I do, price is doing what? It's either moving sideways or it's moving up or down, right? It's either breaking out or it's consolidating. Well, in the case of the S&P 500 right now, and this is using the data going back to 1996 as an example, the solid red lines are our horizontal trading range boundary lines. It's really that simple. Now, with regard to what has gone on inside the S&P 500, this 1971 level, which the S&P broke above here in August, tested it back in September, certainly tested in October. In fact, price broke down back towards its midpoint area. In fact, I can put the midpoint lines on here, and I'll do that. But first, let's just take a look at the overall picture here. And if we take a look at the primary or the horizontal trading ranges out here, this says that the S&P 500 on a monthly basis, its next stop during this favorable seasonal cycle is the 2185 level. Don't hold me exactly to the number, but right around that 2185 level. Of course, we can see another level up above there is 2400. And when we take a look at the consolidation break, saying 2350, 2400 sounds more logical. However, let's go take a look at the midpoint lines on here on the monthly chart. So this is the monthly chart. That's what's up on our screen. If we take a look at where price actually stopped here, let me try to blow this up just a tad out here. Let me actually put the labels out there. That might help us if I put the price point labels out here. There we go. So 2078 is the actual midpoint line. Now, what I want to do is I also want to tell you that the horizontal lines going across my screen, those are nothing more than the price distances from the group where there was the largest number of either opens and closes, which was way down below where we're at.
So these numbers, these lines, these horizontal ranges were, in fact, I'll show you. I'll go ahead and put those, I'll set those up as dash lines on my screen out here. Let me just do this. Let me take the two levels that are used. Well, I'll switch those to dashes. Here you go. At 1327 and 1112, those are the two numbers that were used out here where we've got the largest number of co-located opens and closes in order to generate these horizontal trading range lines out here. Now, that says the midpoint is 2078. The actual high out here, well, let me go ahead and turn the data window back on. That would make it a little bit easier. The actual number that we got up to was 2076 versus 2078. Pretty cool. Now, these midpoints oftentimes are areas that act as resistance. We'll see. We've got the shorter-term signal inside the ES Mini. We'll see how that continues to pan out here. But what I can say is that if, in fact, price moves above 2078, you can expect 2185. Now, I expect 2185 to be the level that price moves up to going into the end of the year. Maybe it's into, beyond the end of the year out here, the Santa Claus rally, but not until we get some type of nice little pullback. Now, I prefer it to be one of these scary kinds of pullbacks. A logical spot for a scary pullback inside the S&P 500 would be a move down to 1971. Trust me, if we see a move down to 1971, that's about, it's not a 100-point move where you're 2056 out here. So you got 60, 20, it's a 75-point move. Everybody's going to say it's over. Santa came. He's delivering coal. And folks, until you get, if we were going to break through that 1971 level, it was October that it would have been done. Wasn't done. That doesn't mean it can't be done, but let's go with the information that we actually have at hand here. Let's go with what the stock charts, let's trade what we see. Let's not trade what we believe. Let's trade what it is that we see out here. And what I see is price has made it to its midpoint level. We've gotten an intraday signal on the 120-minute time frame, 30-minute, and so forth. We go back and take a look at that. But I really want you to understand this as the larger picture, and it has absolutely, positively nothing to do with me and what I believe the market is doing. This is what the market is doing. This is what the market is communicating to you and I. And so here's some excellent work. I mean, fantastic work. Look at the work we've gotten to use this morning already. We've gotten to use the work from H.M. Gartley. Of course, that's all courtesy of Larry Pesavento for even being able to bring all that to us. We've been able to use the work of so that A to B equals. Oh, we haven't even done the A to B equals CD pattern. What the heck am I talking about? Let's in fact go do that work out here on the monthly chart. So let's go see what its signal is. So let's put the A to B equals CD tool on our screen, and let's go ahead and let's come down to the lows out here in March of 2009. That's going to be my A point. Now I'm going to use the B point out here in the May of 2011. That's my B point. My C point's going to be down here in October of 2011. So we've got our A to B equals CD to the upside. Now, here's the deal. 42% retracement. We're going to say that's a 0.382 retracement, and that's back in October. Strong move. Absolutely strong move. You take a rubber band, you wrap it around your finger as hard as you can, and you only back it off 38.2%, and you let the rubber band go. What kind of energy are you going to have there? You're going to have massive energy. Likewise, take that same rubber band, wrap it all the way around, and back it off 68%. What kind of energy are you going to have? A whole lot less. What kind of energy do we have here coming off that C point? Yeah, strong energy. And so what has happened here is price has made it above that 1 to 1.272 A to B equals CD. 1970 is that number. What I can tell you is that inside these markets, there is no reversal that's ever going to take place until the sellers actually give us a signal. And that signal is always going to be a candlestick. It absolutely has to be a candlestick. Until that time frame, prices you have to give the benefit to who is it that's in control of the marketplace. Well, we've got a 1 to 1.618 A to B equals CD because we're above the 1.272 level. This doesn't mean, look, I have no idea what's going to happen in the next minute. But what I can tell you is what's going on right now. And what's going on right now is that we've got another signal, an A to B equals CD tool out here. And that A to B equals CD tool, folks, is 2213 is the next stop. That's until the bears show up. If they don't show up, that's where price is going to. So now we got three tools taking us higher over time. That doesn't mean we don't have some kind of pullback. 877-927-6683.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow up 30, S&P up 3, Composite up 10 points, Russell up about 6 right now. And, you'd have to say I'm pretty impassioned about, really, it's just simply the way that I believe I coined a phrase. I believe I coined a phrase out here. Maybe I heard it somewhere, and if I did, then I'll give you credit for it. But it's, but I've been using this for so many years, and it's the way that you do anything is the way that you do everything.
It's why when I used to hire people to work for me, if they played golf, especially if they played golf, I take them out on the golf course. You want to learn about somebody in the way that they're. I heard John Logan starting to tell a story, but I was in the middle of getting things set up and getting my computer rebooted and all that kind of stuff. I didn't get the full story out there. And storytelling is absolutely an art out here. But if you want to really learn about how somebody is going to respond in life, take them out to a golf course and see how they actually play. See if they count all the strokes. If they're willing to count all the strokes, the good, the bad, and the ugly out there, they're a pretty honest person. So if you're trying to hire somebody that's honest, take them out to play golf. See if they're a cheater or whether they're willing to take their licking and keep on ticking. That old Timex watch out there. So the way I do everything. The way I do anything is the way I do everything. So pretty impassioned. Now, I don't think it does you any good for me not have any conviction. For me to be out here for a couple hours a day and to not have any conviction behind what it is that I see, that absolutely does you no good. I know that oftentimes that confuses folks. If my impassioned or what I'm looking at is different than somebody else's out there, that's actually up to you to be able to then go and decipher the information, do your own work, and figure out what it is that you see. Because there's no way I'm telling you that I'm always right. In fact, far from it. But that will not ever change, my conviction behind what it is that I see. What I am always willing to do is take a look at new information, is to start with a clean palette like we did on the S&P 500. And if you can start with a clean palette, whatever it is that you trade each and every day, and then start to decorate it, start to paint it, to see what signals are out there, you will be so far ahead of the game. That way you'll lose your opinion at the door, and you'll just simply come to a chart and try to see what it is that you actually see out here. Right now I see a Dow that's up 22 points. I see a market that is turning. So even as bullish as that market is, it's not just a one-way market. And that what I'm really suggesting is that you should be trying to find the place to make the next buy out here. I don't think that next buy is right now today. I don't even know that it's going to happen tomorrow out here. But if we take a look at the summation index is a great trend tool. It's a lagging indicator. Sometimes you can catch it right away. Well, if we take a look at the New York Stock Exchange, the price oscillator had enough net decline in issues yesterday to push it through the zero line. To get through the zero line tells you sellers have control. Today's a big day. Yesterday was sort of a big day, but today's really the big day out here. Can the sellers go ahead and fend off any of the buyers out here? If we see at the end of the day that the summation index continues to turn down, that means the price oscillator is still below the zero line. The answer will be yes. We haven't had 2 days with the price oscillator being below zero since back here in the September 8th, September 9th type time frame. That's in the New York Stock Exchange. We also happen to have that same pattern inside of the NASDAQ composite yesterday. Yesterday there were enough net declining issues to push its oscillator below zero. Now, today we're seeing it move up here, maybe testing that zero line out here. We need to see the composite. We need to see the New York Stock Exchange. Both of them stay below this area. The Dow itself, 30 stocks out here, it was not able to push its price oscillator below zero. If, in fact, it does today, and it's just slightly above zero, by the way. It wouldn't take too much for a price to move lower. But if you get all three, and actually, even though I don't have the tools to put the NDX up here, but I can tell you the NDX is also below the zero line up there. That's our time, folks. Thanks so much for joining us here. Stay tuned. Hour 2 of the Trader's Edge is up next. Go out to start your day. Have a terrific Tuesday, and I look forward to seeing you bright and early tomorrow morning. Take care.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.